course it would be. Here you go. S&P 100, 790. S&P 500.
167 on the down.
NASDAQ comp, live, 46. 175 right here on the opening print. 181 and climbing. First minute opening right here, 537.30. You had a 402 high, 21 with that top-down trade in Apple. Volume count, 581,000, 45,000 here. Amazon, it's cooking. It's got some volume in it. This is the opening bell, MMTs. Okay, and you can see what you're looking for is that top-down trade. Right away, if they slide the bids in your application, they're going to pull them back. Then you're going to look for the support levels. There's your short on Apple. Here is your short on Google on that opening bell print. And a 537.30 with a $2 drop is normal. I'm going to bid in here right now on the 540 call. I'm going to tell Rick Goley to go ahead and buy me right here at 250. Bid in 245, bid in at 250, go a dime ahead of him. You'll get hit because it's still bid 250.
I don't have that one up.
Here's that Google gap. There it is.
49.
That's the top.
58.
And that's yesterday's downtrend. And if that thing starts slipping at all,
29.
It'll be time to come out. So once again, the ranges are range bound on the opening bell on that 369. Sell gap on the opening bell starting a 12 bar here and now. And what was it on the opening bell? And it's all about that opening bell within the first 6 to 9 minutes of the public and how prices start to get made. The right elbow gap short slide the bid half bar that I talk about, and you can see here where the diamonds could not keep going on this bar, and it turned into a big sell one right below them. But now we're putting in what we call a 12 bar
37
once again on a diamond reversal. We've got the broader markets are up huge. I mean, the Dow's up 211, the NASDAQ, all of this is not even, we're open 10 minutes on the opening bell. And it's the last end of the quarter. Let them chase the stocks. Let them set the ranges up. Let them set the weighting up between the long and the shorts and how they're actually going to play out. Once that initial short has happened, we're in a current rebound. You can't go up to a teeny on a wick and slide back down. No. You've got to go up and fill in the price action and then take out these last highs. This is going to be the teeny line support before its big breakdown yesterday, where the intraday opening low is. And you can clearly see it. Let's make sure it's in the video. It's right here. That's where this support, if it's broke, then it comes down. If it holds, which right now they're selling into the 12 bar, this is a major line. And you have to be able to identify the previous day's downtrend to this right elbow gap on the opening bell.
Apple 0.
Here you go, opening print. We got the Apple trade, and we're making a market, and that top-down short is exactly what we said. The right elbow is the opposite of the left elbow. Slide that bid next to the green bar. Slide that bid, wicking down, sliding, taking that out, making the change in the reversal, and then making the execution. Big profits to that. That meant right over here. What did it mean? It meant that this 410 put that my thing is on hit $9 and went to the high at $12.75 because the top-down trade was in play. Here it is live right now, 7:02 a.m. Pacific Standard Time. And the thing about it is the price action between the public is what it should be. And it should be for the MMTs to take total control of the weighted buyer and the weighted seller, and to know that the public emotional prints belong to them. And we continue to break higher in Google off of its intraday lows, and it's making the lows. Every time it breaks up, it rolls over. And when Apple breaks out, here it is right here in the live video, right here. Here is the Google trade once again on this opening bell. Right here. They're finally right elbow gap, bringing it right back here. This is where we look to see how good the market gets made now at this teeny line. And that in pre-market analysis is that as we're all adults, is how they put that in and that top-down trade and what that reversal bar looks like right up at the very top is where you start to take it, because that top-down trade has not changed. And you can clearly see it here. It pulled it all the way back, and this is where markets get made, and you'll start to see big pops in IR. Okay, so I'm going to go over to the call contract. Here's the Apple chart doing what it's doing, but it's in my way right now. So I'm going to pull it over here, and I'm going to look at how they stole the premium out of here on this 5:30 call at 4:10. I haven't made a transaction. Rick Goley, go in there and let's make a market at 4:30. Go
4:30?
Yes, a dime above, sir.
One contract at 4:30.
Yes, at 7:04 a.m. Do it now.
I'm out there.
Get that bid there. There's 30 cents wide. How do I get an entry? Nobody can get them. They always pay 460. No. You make a market with one contract based on the fact that this is very extreme. Come off of it. Cancel. 410's below it. Now go a dime above it. Be smart. It's 40 cents contracted. That's still wholesale. You're not paying retail.
I'm at 4:30, 4:10, 4:20.
420 above the bid. I got it live. 360 on the bid. That's where Mr. Goley is sitting.
They went
And
370.
you're putting the lows in at 528.10. And your IR is at 1, 6, 7. There's a sequential event that will happen, MNTs.
Apple
What will it
20.
be? A big spike in the IR. Go ahead and bid another one at the low of 380. Go ahead. Take him out by a dime.
3.8.
420 by 3.8 down here at the bottom with the 10 IR and a 0-0. If this thing wants to race back here, I'm going to want to own these. I'm going to start making a market. They were 940 on the high. I think I can afford to come in here. I'm going to be wholesale here now live on the opening bell at 7:07 a.m. Pacific Standard Time. Go 390, Goley. Let's pull that up. I've got a 7. Yeah, let's make a market. I'm at 0.1 positive at $1.02 per teeny. Goley. See how all the public just paid the retail price? Look at that. Go ahead and go $4. Go a dime above. Let's get
$4.
right back in it. Yep, that's the bottom hook. I've got a bottom hook right here. Right here. He came right here. We're leveraging up. That's what you want when a bottom gets put in. Here and now. Go 410. It's okay. We'll make
410.
it. Yep. Then put a 420 on top on one. Make them throw it. 50 cents over.
420.
Yep. Keep it. There you go. Keep the 410 out there to line the bid. Here. You just got a double bottom in Apple. But
30.
look what they did with the top-down short. As I said, top-down remains with the bottom up. And if they're going to be bullish, they short the top-down. That was the trade management. That was the verifier bar. That was the verifier bar on both equities. And how you make bottoms. He didn't pull it down. This technically counts as a teeny expansion, double bottom with a double diamond. And you will have to have what I told you and Mr. Mantalk is a 2 teeny breakout to confirm reversal bottoms.
Long Amazon.
Here we go, Tina. 480 by 520. We got in around between 330 and 340 on the low.
3738.
So when we rallied up here, they went from $8.30 down to our entry, and now they're $4.90. And this is that secondary top down. So here's your big short down from $2 to $8.30. That all happened here. They gapped it up. They took these from $6 to $2 and ran them to all-time highs. When we went straight down and straight up off the bottom from $8.30 down to our entry, and here is the glory of 490 by 520 with another top-down reversal in Google in the opening 2 hours of trade management. and how to take profits